think we can all agree that this year has been a once-in-a-lifetime experience. We hope, right? But there's also some really great planning opportunities. In March of this year, the CARES Act was passed. And the first tip that we have for you is to remember that if you were a non-itemizer and made a cash gift to charity, you're able to write off $300 as a charitable deduction. The second tip that we have is to remember that there was an increase in the charitable deduction limits this year. So for individuals, you can write off up to 100% of adjusted gross income. For corporations, you can do up to 25% of net income. So what's that mean? It means that you should meet with your advisor to see if there's any strategic planning that you should be doing this year. Maybe restructuring your portfolio to Roth IRAs and using a charitable gift in combination with that, or other strategic planning around your charitable giving. The next tip that we have is to remember that out of the CARES Act, those of you who are of an age that you were required to take a required minimum distribution, that's been waived this year. So you don't have to take that money out of your IRA. However, you may want to still consider doing the qualified charitable distribution from your IRA. So if you're 70 and a half, you can do what's called a qualified charitable distribution to charity, and that's 100% income tax free. So if you are charitable, that may still be your best source for giving this year. The fourth tip that we have is to remember that in 2017, in the Tax Cuts and Jobs Act, there was an increase in the standard deduction. So many of us who were itemizers in the past are no longer able to itemize. But our tip is to remember that a gift of an appreciated asset, such as appreciated stock, into a donor-advised fund can still give you a tax play because no one pays the capital gains tax on that type of a gift. And then even better, if you're able to, you may want to consider bundling or bunching your donations into one tax year. So if you normally would have given $10,000, consider making a gift of maybe $30,000. You put that into your donor advised fund. You can open that at the Dayton Foundation, and that tax year, you're above the standard deduction. And then in future years, you take the standard deduction. So you keep giving out $10,000 a year, $10,000 a year, $10,000 a year from your donor advised fund, and then you refund that donor advised fund and put in another $30,000 or whatever amount above the standard deduction and get that higher amount in that tax year. The next tip that we have is to remember that low interest rate environments create really great planning opportunities for large estates. So meet with your advisor to see if a lead trust or another type of charitable trust or charitable vehicle may be good this year for you to consider based upon the interest rates. And then our last tip, don't get caught by scammers. There are lots of scams going around this time of year. So we have a free product at the Dayton Foundation called the Charitable Checking Account. You can open that online for free. And what we do is we vet all of the charities for you before that gift goes out to charity. So remember, if you need us, we're here at the Dayton Foundation, and we just hope that you have a wonderful holiday season.